Let's get in a word on the state of the Indian markets and economy with an experienced voice. We've got Raj Bhatt of Elara Capital joining us here. Thanks, Raj, for joining us here on Smart Markets on ET Now. One side says the markets are stretched, the other side says upside exists. Which side are you on?
Yeah, see, I think the market is being driven today by liquidity and optimism. You know, optimism is sentimental. It can drive prices to the level where logically you can't justify. I think partially we're going through a phase where there's a lot of optimism about India, and also the domestic side, we have a lot of money coming into mutual funds, and from overseas the money is pouring into ETFs, if at all, and the ETF money is not a rationality driven. You know, they are more driven by sentiments, and money coming in through funds is more driven through analysis and fundamental investing. So I am of the view that the market it cannot just go on keep increasing with the fund flow and the sentiments. It must be backed by earning growth, and unless we see earning growth, we are bound to see a correction in this market. Whether correction will come now or it will come in 6 months later, it's anybody's guess, because nobody knows the precise point. But I think market is moving into the area where I'll say that it's more than fairly valued, and any growth of index or the stock markets from here would probably may lead to some correction in the near future.
Raj, talk to us about the longer term picture right now. Do you really buy this argument that there's a secular bull run taking place in the market right now, and any fall over the next 2 to 3 year, 1 to 2 year actually should be bought that particular dip?
See, if you take 2 years view, I'm not talking about 1 year again short term. 2 to 5 year view you need to take in India if you want to invest in India. 2 to 5 years, it's in a very secular bull run. So whatever corrections happens in the market will be a fantastic opportunity to get in. People who have missed out, I'm sure they're going to get a chance to get in again, because we are saying, what we are saying in India is the shift in the way the business is done in India. Plus externally we are seeing that because of the Trump's win in US, there is some friction with China, and that might lead to preference for India. And also globally, India has become a bright spot in terms of growth, and also the demography what we have. So we have penetration levels across all sectors are very low. So we might see sustained growth over few decades in India, and that means fantastic opportunity to invest in India. And Indian stock market is more entrepreneurial as opposed to state-driven market in China. So 2 years to 5 years to 10 years, very positive. But 1 year, unless we see a significant growth in earnings, I think we're going to be disappointed with the performance in the market.
Raj, today of course the market may have ignored or shrugged the geopolitical risks which are at the horizon because they've calmed down. But if you look at over the last couple of days, there has been recurring commentary from various leaders across the world, which is making market participants a little jittery about their open positions. Do you really think that this risk which exists at the horizon can cause some amount of shock to the market globally?
I think this is one of the biggest risks which we are carrying today. More than the, we have a risk in Europe also with political, the elections coming in Europe. That's also a significant event. Elections in France first and Germany later, because these are two pillars of European economy, and also I'm talking about European Union. So the election is one worry, but immediate threat is this North Korea, which has just come up last few days. So that's a very big event. I think it's going to, sentiments will drive the market again. Unless the event happens, it's all sentiment driven. So it's more news flow driven than the actual event. If the actual event happens, obviously we could, depending on what happens, market can also, normally we've seen once the event is out of the way, you see more optimism coming into the market. So it's very uncertain territory what's going to happen, and depending on the actual event, market is going to behave. But until that happens, it's all rhetoric, and the sentiments will keep driving up and down depending on what's happening on the ground.
Of course, the presidential elections in France, campaigning is underway. You got Germany next. They're going to be very important cues to the global markets. Till then, your chat with global asset managers and asset allocators. Can you tell us what kind of perspective they are bringing to the table? What kind of cues they are relying on?
You have two set of investors. One investors are you have long only fund and hedge funds. Other is the ETFs. ETFs are playing a significant role. And a lot of money is pouring into India. It comes through ETF now. And ETF is more, I would say, macro and more sentiments driven, because sentiments are positive in India. So money will keep coming through ETFs, because ETFs is blind investments. And then money coming from the hedge funds and long equity funds, I think they all feel that market is slightly overheated. So they have been selling, I think, of late. And I think unless we see earning upgrades, I don't see significant money pouring in from the fundamental investing investors.
Raj, I now want to talk to you about the earnings. You know, we keep hearing at the beginning of every quarter for the last few quarters that this is the quarter we're going to see the earnings swing come back, the momentum return. Is that going to happen in the fourth quarter? The earnings that are coming out, for example, you've got TCS tomorrow. A lot of that is getting priced into the markets.
See, my view is short term we might be disappointed, because I don't see the credit growth in India. If the credit growth is not there, how are we going to see earning growth? Because earning growth will either come through pricing or through expansion of capacities. We are not seeing expansion of capacities. Pricing is world over, we have a problem with inflation. So my personal view that we might be disappointed in next few quarters, and we might see some correction post that. But you know, as I said, that medium to long term the story is intact. So if we have disappointments in earnings leading to some correction in the market, it's best thing to get into the market for long term. So that's what our view is. And there are some sectors which are overheated. There are sectors which are still, you know, public sector companies are still, you know, fairly valued, most of public sector companies. Whereas on private sector side, we have some optimism, and you know, particularly look at the valuation of private banks. Very difficult to explain those valuations where, you know, deposit base is not significant, but market cap is, you know, twice the deposit base. I'm talking about private sector banks, all of them put together.
So Raj, if the market is indeed disappointed by the quality of earnings this time around, which you do not rule out, which are the sectors which look good in those kind of correction? Where would you find value in this market?
See, I'm talking about correction. Post correction, the sectors, today if I had to invest, I'll invest in public sector companies. That's my preference. Obviously my fund manager is very different, you know, they invest very differently company to company. But if I had to decide personally, for me today the valuations is there in public sector banks, public sector enterprises, and private sector only mid cap. There could be some companies where I see value, but most of the large caps I see, you know, they're in the top end of valuations. So if the market was to correct, as you rightly said, then I would go back in those cyclical sectors which are led, where the earning is linked to recovery, and I'm sure that due course we will see credit growth and the expansion and the capacity and expansion and earning coming from expansion of capacities. So I'll get into metals, I'll get into auto, but post correction.
Right. Raj, lastly, you are also someone who observes the political developments, the reform process very closely, you know, working closely with certain sections of the government. What are your thoughts the way reform is being taken up? You see progress and the momentum continue?
I think very valid question. I think we see a fundamental shift in the way the governance happens in India. I think it's unprecedented that we are moving more towards transparency, and their clear mandate means decision making will be much faster. So I think middle of next year 2018 we will see majority for this government in Rajya Sabha. That might drive the passing of a lot of new legislations which are stuck. and I think unprecedented as far as governance is concerned. I think only risk we have is, if I have to look at country as Mr. Modi is the key cornerstone of this government, and he is most important person. So it's like key man risk, we say. That's the only risk we see. Otherwise, I think I see a lot of optimism about India, a lot of positive sentiments in terms of how India is going to perform in next few decades. And I think this shift will happen over next few years. And first time we feel that government is accountable to people. We see I was interacting with people who had something to do with Punjab, and Punjab is a Congress government, but the kind of governance happening there also is unprecedented. It's fantastic, where government is proactive to attract investments. So I think this is a very good move.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.